Welcome back to the Contrarian, everyone. I hope you're all doing well. I'm doing well this evening. Today is Tuesday, January 7th. It's just after the market closed today. And, we just finished up the first week, the full week in 2025. And it does look like kind of a unique year that we're set up to have. So I'll just talk about kind of the major events so far of this year, at least that have come across my radar, that have been major events in the markets, the financial markets. And so far, we've had interest rates continue to go higher. We've had the dollar continue to go higher. We've had the stock market kind of continue its consolidation that it has had for about the last month, I would say. And of course, yesterday you had Nvidia's CEO Jensen Huang give the introductory keynote address at CES 2025. That was a very anticipated address on the part of Huang, and while he did reveal a lot of, I would say, just exciting developments for the company Nvidia, it does appear like it was kind of a buy the rumor, sell the news kind of an event for that stock, and I'll talk a little bit about why that could have been, and I'll also talk about why I do remain optimistic on Nvidia and the whole AI trade, generally speaking, even though it has gone on now for a couple of years. I'll discuss that, and I'll also talk about why I do actually think interest rates are going to trend lower in 2025. I do think that interest rates are probably close to rolling over from here, even though it's kind of interesting to see the dynamic that has occurred with interest rates rallying as the Fed has been cutting interest rates on the Fed funds rate. So that's an interesting dynamic that usually doesn't happen, and I think it's kind of spooked some people. But, first talking on the general stock market, I guess, it's kind of been, I would say, just a little bit of a boring year so far, although we're not that far into it. But just with regards to not a whole lot happening either direction. The general stock market has pretty much just continued its consolidation that it's been in for the last month or 6 weeks or something like that now, and we have seen, I would say, just a continuation of that so far this year, and I do remain very optimistic on the stock market going forward, but it's kind of clear that probably it's almost just I would say just kind of a reset of investor expectations and investor sentiment that was needed to kind of set the stage for the next leg up. And I do remain optimistic. I think it's likely that the stock market goes much higher in 2025, just as kind of, David Hunter's melt-up type scenario likely does continue to play out. It probably takes a little, I would say, longer than what he's thinking. It's probably more of an extended rally, although it could, at the end kind of transition into that kind of parabolic melt-up when investor sentiment really does get stretched, to being such extremely, optimistic of a scenario. But all that being said, the whole AI trade, why I do remain very optimistic on Nvidia and semiconductors generally is just kind of looking at what has powered this market higher so far. It has, generally speaking, been large cap tech and the Nvidia and AI trade type of stocks out there that have really been just the cornerstone of this whole market rally that we've had in the last 2+ years now. 2023, 2024, both being pretty exceptionally good years for the stock markets and pretty poor years for the bond markets, generally speaking. Kind of unique to see, but it does go hand in hand, in terms of kind of why I would expect both the stock market to go higher from here and for rates to go lower from here. Hand in hand being the fact that I do think that the expectation that somehow commodity prices are going to somehow go up from here, which that seems to be, I would say, a base case expectation of a lot of these people calling for higher inflation from here. They seem to expect that Trump is going to have to dramatically replenish the strategic petroleum reserve, and that is going to somehow, cause oil to spike, and that will cause natural gas and other commodities to spike. Kind of like what we saw in 2022. I just don't see that as a big reason for oil, especially to spike, just given how small the strategic petroleum reserve actually is in comparison with global oil production. I mean, it is very small. And I do think that the kinds of changes that Trump can put into place to really free up new oil and gas development and drilling and everything like that, I think that's going to be a major focus of his, and it probably already is. He even just tweeted today that in his opinion, interest rates are way too high. And, of course, Trump being a businessman, real estate businessman, he really likes low interest rates. And, he's no dummy. He sees that the U.S. is over $36 trillion in debt, and that high interest rates are a burden on, our fiscal system as well, not to mention just individual consumers. I mean, the government's definitely the largest debtor there is. And I think that's clear that he sees that. So he's going to do everything he can to, I would say, ease expectations of higher inflation, and that in turn will drive, investors, broadly speaking, to want to get back into bonds. And kind of the whole reason why bonds have, gone up in their rates since the Fed started cutting rates, is the fact that investors apparently don't really believe the Fed. Apparently they kind of are suspicious that inflation will actually trend upwards, or at least stay higher than what the Fed would prefer. And so, that's fundamentally why we've seen this divergence in terms of the Fed funds rate coming down, pretty sizable amount, about 75 basis points now. And then you've had the U.S. 10-year and, the longer end of the curve head pretty substantially higher than that. So it's kind of gone opposite so far, at least from what the Fed has done. And, it's my expectation that it's likely going to take something like, a CPI, PPI print coming in lower. It's kind of easing investors' expectations that, inflation is actually still trending downwards, and that they can, then see bonds as a more attractive investment in that kind of an environment. And so that is why I personally still do remain bullish on bonds from here going forward. At least, speaking about this cycle, just thinking about how undervalued bonds have been historically, or, speaking of how much of a bear market they've had the last 3 years. I mean, it's one for the history books. You really can't find hardly a bond market like what we've had the last 3 years, where rates have gone up so quickly that bond prices have really plunged. And so I do see it almost as a good opportunity, not only to lock in relatively high interest rates that you'd be earning, but also just on a price basis, looking at where prices could go on these bonds if rates, come down even just a decent amount. I mean, the 10-year could go down to 3%, and it could appreciate some 20-25%. And I wouldn't think that would be, very big of a move either. So, I mean, just looking at the total, setup in the bond market is pretty unique right now. All that being said, I'll kind of move into Nvidia now and the whole AI trade, and this is where most of the news has been the last 2 days. But, I was actually surprised at how many partnerships Nvidia had just recently released that Jensen Huang talked about at this CES talk that he gave. And, he talked about their new graphics cards that Nvidia is going to be coming out with. So they're actually kind of, developing a whole new gaming-focused graphics processor, whereas, the whole company Nvidia kind of started with building these specific semiconductors for gaming computers and gaming processors. That's kind of where the whole company started. AI wasn't really a thing back then, and so it's kind of interesting to see them almost come back to what they were originally focusing on. whereas AI has definitely been the majority of where their new business has come from in the last 2 to 3 years. They're still focusing on gaming, in other words, and on personal computers. And as I'll talk about, I mean, they are releasing a some $3,000 personal computer that would have some supposedly some 1,000 times the typical computing power of a personal computer. So it's pretty interesting. It's they call it Project Digits. It's for developers. They're supposedly targeting kind of web developers and AI enthusiasts who want to experiment with their AI models at home. So this wouldn't be your average person probably buying one of these computers, but apparently they're planning to launch this in May, and it has one of their Blackwell chips in it. So of course that's what allows it to have some amazing computing power, and I'll be curious to see how many people actually end up buying that, and what the typical person buying that actually uses it for, because maybe it'll just be a bunch of gamers or actually some AI enthusiasts. I don't know. But I guess more importantly, they announced a lot of partnerships, actually one with Toyota and Aurora, basically focusing on autonomous vehicles and autonomous shipping trucks, respectively. And Nvidia's stock actually sold off on all of this news. I think it was again, as I said, kind of a buy the rumor, sell the news kind of event. But a lot of these other companies, that they announced partnerships with, their stock was up, anywhere from 20 to 60% today. So it's huge news for a lot of other companies. And, according to Jensen, he's saying that, robotics and that whole area is supposedly what he is predicting will be the first multi-trillion-dollar robotics industry. He sees a lot of potential with that. So that's interesting to kind of hear from him what he sees as an upcoming huge industry in the AI space. See whether that happens or not. But so they announced kind of, I think, what most people were expecting, and then a few cherries in there people weren't really predicting. So bottom line, I think it was about what the market was expecting, but a lot of people did end up selling on that because, of course, Nvidia closed yesterday at an all-time high, around a $3.7 trillion market cap, which is enormous now. I mean, they're second to Apple. And, going forward with how optimistic I am on Nvidia, kind of like I said about a year ago, I do actually think Nvidia does, overtake Apple to become the number one company in the world. And a few times, a couple times, they have briefly been the number one company, but it really hasn't lasted. And so, just given the upside I see in Nvidia from here, I do think that it's likely they overtake Apple again, and then probably, it could stay that way with Nvidia having a pretty substantial lead on Apple. But, I mean, Apple, probably has some upside potential as well from here. So we'll really need to wait and see on all that. But, I do remain optimistic on, most things going forward. I guess one thing I'll briefly mention is stock that I also own finally released some encouraging news. Of course, Enovix. It's a next generation, consumer lithium-ion battery manufacturer, and they just released some encouraging news. So that was also a big thing on the day, but it didn't really make the mainstream financial news by any sense. So love to know what all of you guys think about this year coming up, 2025, interest rates, AI trade, overall markets as well. Love to know what you all think, and hope to see all of you again at some point.